Ongoing dovishness at the Bank of England has put sterling under pressure today and ignited a rally in the FTSE. Over the last few months, the rally in the sterling against the US dollar and the euro and other currencies had been really driven by two factors. One was general weakness in the US dollar that's lifted all boats relative to the greenback, and the second thing was anticipation that the Bank of England could join other major central banks, starting to move into the hawkish camp, starting to move away from stimulus and towards pulling things back and normalizing monetary policy. The Bank of Canada has already done so with its July rate hike, and there was a feeling out there that the Bank of England could signal a rate hike sometime later this year. However, today's MPC meeting completely squashed that. The number of hawkish dissenters went from 3 to 2. This was as expected because one of the hawks recently retired from the MPC board at the Bank of England, and usually when people come in and join these types of committees, they don't go against the flow, at least for their first few meetings. So that's understandable. But what we got, though, was a lot of other dovish talk out of the Bank of England. They cut their 2017 GDP forecast to 1.7% from 1.9%, and more importantly, they indicated that their assumptions for forecasts are based on 2 rate hikes over 3 years, and the first rate hike not coming until Q3 or 2018, or in other words, a year from now. So with 2017 rate hike off the table, a lot of the people that were hawkish on the Bank of England have seen that they were out on the limb, and that's kind of been chopped out from under them. And so we've seen a tumble in sterling against both the US dollar and the euro. And I'll start here with cable. And what we can see here is we're actually getting a bearish key reversal day. We've been in an uptrend since March, but recently it peaked here, did touch a new high up near 132.70, and then sharp downturn, breaking this Fibonacci level here near 131.50. That was also a breakout point, and dropping back into this low 31s area, recently trading about 131.35. We're also starting to see a rollover in the RSI as well, which also suggests that upward momentum starting to fade, and we could be into a downturn here. First support about this 131 level. This is about 130.60, the 130 round number, and there's another Fibonacci level about 129.70. So there is room for some retrenchment in the pound against the US dollar. We're also seeing sterling weakness today against the euro. The euro has been trending upward against sterling for the last few months. And what's interesting about this is both the euro and the pound have been climbing against the US dollar, but the euro has been climbing even faster. And we've seen this today. We've got a step pattern here: rally, consolidated higher level, rally, pause at a higher level, and today big breakout over the 90 handle, the big round number here, rally up off of 89, and we've traded up towards the 90, 25, 90, 30 area. Initial resistance here is about 90.50. These highs here are about 91.30, and the big peak on from the Brexit referendum was 93. So there is room for some upside, and we're seeing it also here confirmed. We've got an upswing again in the RSI, and it's not overbought. This golden cross back here confirmed the uptrend. So we are in an upswing, and there is still a bit of room potentially technically for this to continue to advance on trend. The one thing we have seen, and this has continued to be the case, is when we've seen sterling weakness has led to strength in the FTSE. Of course, the FTSE 100 is made up of a lot of multinationals that when the pound goes down, they suddenly get cheaper relative to their global peers. And so we are seeing a pickup in the FTSE today. We've basically seen the index trading in the 7,300 to 7,520 range for about the last almost 2 months now. We've picked up again over 7,400, rallying up off of that, advancing on 7,470, 7,480. On a breakthrough 7,500, there's resistance around 7,525, and then the early June peak near 7,600. Looking at the RSI, we're again seeing this pickup back above the 50 line, indicating confirmation that momentum is starting to turn upward here. So today's Bank of England decision has created a turning point in a number of UK related markets, particularly the FTSE and sterling.